let's talk about bonds and the latest September bond auction in Nigeria. Massive demand from investors for the two reopenings that were offered at the September bond auction, a 5-year and a 7-year. There it is, 17.945. That's the coupon for the August 2030 and also for the June 2032, a 7-year. So 100 billion was offered for each, so 200 billion total. I mean, look at that. It was about 236 billion, 37 billion, about 231 for the 5-year. That's the demand. 1 trillion for the 7-year. So a total of 1.26 trillion. That is, and then you do the calculation. Basically, when you take what the demand is versus what was offered, 530% oversubscribed. We're happy to have Taiwo Adams. He's a co-managing partner at Aztran Global Investments, joining us to discuss. Taiwo, welcome to the show.
Thank you for having me.
Thanks for being here. So, what was your take on why there was so much demand for this bond offer?
Okay, I mean, there are quite a few things that were responsible for that. If you look at some of the data points that we've been experiencing in Nigeria for quite some time, last week we had the MPC. Obviously, we saw that there was a cut there, a 50 basis point cut. And as well, there was some adjustment in the CRR as well, from 50% to 45% as well. And of course, you know, you look at what has been happening with inflation as well. Inflation has been trending down lower. So a lot of all this also, with the CRR report that reduction that they did, brought about a lot of liquidity coming to the system. This week, we started off with about over 5 trillion in the system. And you see, of course, because of the sentiments around the MPC, you start seeing investors starting to extend their risk, moving from the short-dated and moving to the longer, trying to take more duration as well. And if you notice, for the past few weeks, we haven't seen OMO auctions come in place as well. So all that liquidity on the maturity has to go somewhere. Yeah. So that is obviously flowing. That went into the bond auction, and we saw that aggressive demand at the last bond auction.
Okay, so why was there? If we look at the demand for these bonds, right? It's a 6.3 coverage ratio. Basically, just talking about the oversubscription. We had 231 billion for the 5-year, 1 trillion for the 7-year. Why was there much more demand for the 7-year as opposed to the 5-year?
I mean, typically we always see investors tend to, when the story is looking good, the data points are looking good, investors will most likely tilt towards the longer dated maturity. I mean, the DMO hasn't offered a 20-year or 30-year in a very long time. We've been staying at the mid-range as well. So investors will only go to where the longest on the offer. And of course, you look at the 32s as well. They've been reissued for quite some time as well, and it's more liquid. So you will see that investors will tilt more towards that than the shorter dated as well.
Also, the DMO ended up allotting more than what they offered. I think it was like 400 billion or so for the 7, and maybe about 100 billion or so, I think, for the 5. So what goes into that in terms of how much they end up allotting for these?
For the DMO, is about just managing their cost. You look at it that from the last auction, we saw that the auction closed almost 200 basis points away from where it closed now. And for a DMO, you look at the opportunity that has come in terms of the amount of liquidity or the data points that is favoring you. For you, and if you look at Nigerian story as well, all the revenue targets are being met. Like they said, you know, for DMO, they still need to borrow money because you take advantage of the fact that you've seen that demand. And so why not take advantage of this demand and take at relatively decent rates? And that's where I think that their view would be coming from, why they took a lot more than they anticipated or they planned to take.
Perfect. You talked about relatively decent rates. I want to ask you about rates, but before I get to rates, I want to get your take on, because you mentioned inflation in your first answer there. So, I mean, looking at, you mentioned this, the decelerating trend in inflation. What's your outlook for inflation in Nigeria? How do you think things are going to...
I think, you know, typically Nigerian inflation is largely cost push. We see that a lot of the components that affect inflation are largely due to the rise in cost. Nigeria, you know, we're largely import-driven, and FX is a major component of that. And you look at the energy and then the food components are largely what makes up, you know, that uptick or deceleration as well. So for now, we've seen FX appreciate. Naira has been appreciating for quite some time, and that is definitely supporting that outlook on inflation as well. So we've seen the stability in the energy prices as well, with the Dangote coming to the Naira for crude as well. That has definitely supported that. And of course, food prices are also trending lower as well. So I think even based on what we saw or what we heard at the MPC, the trajectory is downwards. We don't anticipate that we're going to have any aggressive, especially with the direction that we're seeing Naira right now. As of today, we're hearing that Naira is even at around 1,450 level. So we're seeing that we're trending into the right direction. So definitely inflation will definitely continue to trend lower. Perfect.
Now, so you're seeing that. So now based on that, looking at the last MPC decision, and just for our viewers, 27.5 was the prior benchmark. It's been there since about 2020 or so. They cut that by 50 basis points. The asymmetric corridor, they've moved that to plus 250, minus 250. And then CRR, you mentioned CRR, that was at 50% for commercial banks. They brought that down to 45. Merchant bank 16, and then this was the interesting one, the 75% on the non-TSA public sector deposit. Just to give our viewers a recap of what happened, and liquidity ratio kept at 30. So if you and others have also shared your view that we might keep seeing inflation decelerate, you see more rate cuts from because I know the MPC, the Governor Cardoso says he wants to be data-driven and so on and so forth. But
so clearly, I mean, we've seen his body language has been purely data-driven, and he's been looking at what is also happening on the global space. So if you're looking at what is happening, in the global space, the U.S. Fed is also tilting towards a more dovish trend as well. We saw that they cut by 25 basis points, and that also helped to make our own decision as well in terms of cutting rates as well. Because part of, like I said, a lot of these things has to do with what is happening with FX. And of course, you want a lot of those portfolio investors to keep coming in. And if the rate cuts are if they're cutting rates on their own end, obviously it presents a lot more opportunity for them to come into the emerging markets. And you don't want to cut too aggressively, but you want to also be data-driven, watching what is happening in the global space. So yes, definitely, I think for our own outlook is that we're going to continue to see more cuts, especially if we continue to see a downward trend in inflation, and that's our expectations.
Anyway. Okay, fine. So what does that now do to rates?
Rates we already start seeing investors pricing all of this in. Rates are aggressively coming down as well, so we expect rates to continue to trend lower even before we get to the next MPC. Okay, so
Taiwo, I keep thinking about, you mentioned FX, and we've been tracking it in September, of course. We started September 1st at 1,526, and then now you're talking about 1,450 or so. What about this balance between trying to keep rates high enough to keep attracting portfolio investors to come in, versus the other side of the equation, where if inflation and the macro indices are coming down, how do they maintain that? Because I know you still want the effect, because that's what's popping up. The race, right?
At the end of the day, everything is relative, right? So at the point where you're offering very high rates, it will have to be because of the situation on ground. If you look at all the data, it's pointing to a very positive trend for Nigeria, right? So of course, when you look at all of that, you have to reprice. And then at that point, based on what is happening now and how Nigeria's story is looking, I think there will be a new price that they'll be willing to pay for it. They wouldn't expect to be paying the same price that they were paying but of course, like we've seen with the CBN governor, he's been very data-driven, and he's been very proactive to make sure that he doesn't preempt or overdo things as well. So we've seen that. I think with that mindset and the way he has been operating, I see that the investors will continue to come in. The rates will still remain relatively attractive for them, especially if the rate cuts are going to continue in their own space. Then, of course, it makes us still look attractive as well.
So that takes us to the stop rates now for the, so the 5-year 16, August was at 17.94. The 7-year was at 16.2. August was 18. So I guess this ties into what you've been talking about. What did you make of where the rate settled at?
It was expected for it to be quite aggressive. We saw those CRR credits. After the whole the MPC meeting, they had to do the credits and everything. And obviously, with no OMO auctions that have been issued, a lot of liquidity has been in the market, and that liquidity has to go. We've even started seeing quite a bit of offshore presence in our bond market. Usually, we see that on the short term, but now we started seeing them coming into our bond market. That's saying a lot for Nigeria. So it was expected for us to see that aggressive demand that we saw. I mean, it was maybe not over 200 basis points, but I mean, based on with the liquidity and all of the things all the data points, we expected an aggressive auction.
Okay, now I think we're due for another Treasury bill auction.
Yeah.
I think the last one was almost 2 weeks ago, so that should be happening, I don't know, sometime this week, maybe today or maybe today possibly. And then there's also the retail bond auction. That one happens. That's the 5,000 naira one.
Yeah.
Do you see rates for T-bills and that's also going in the same direction?
I think T-bill rates will continue to trend lower.
Yeah.
We're already seeing that in the secondary market as well. So the last stop rate printed at 16.788 for the 1 year. So we expect that to trend lower at the next auction. We're going to see some aggressive bids, because you have to understand, if they keep holding out on OMO, there are little options for where investors can put their money, and they have to sort of put some money in the money market and fixed income space.
Now, last time we had you on the show was a while back. Right? It was 4 years ago. We're talking about Kenya.
Yes.
I went back and looked at our interview the last time we had you on the show.
Sure.
And I bring that up because I wonder if you look at where bonds are trading in Ghana, Senegal and Nigeria's neighbors. I mean, based on what the regional outlook is.
Yeah, I mean, if you look at the likes of Senegal, I mean, their rates are pretty low. So you can't really compare that to Nigeria, right? But if you look at the likes of Ghana, their average 10-year yields are still relatively high.
Yeah.
But of course, Ghana has cut rates by over 600 basis points in 2 months, right? You know where Ghana is coming from. So of course, it's not just about how high the yields are. You're also looking at the safety.
Yeah.
And when you're looking at the Nigerian space as well, Nigerian story seems a lot more attractive to foreign investors than even the other African spaces as well. So of course, you're going to see some investors, go to some of those other countries, but it's not going to stop the flow that's coming into Nigeria, because safety is also a part of investment schedule for anyone that wants to come and invest as well. Yeah.
Now, I just want to round off with this. We're coming to the end of the year. We've started this, October. Now this is basically fourth quarter. Can you speak to a potential investor that's out there that's looking to put a portfolio together? How important is fixed income, money markets, and the likes in a typical portfolio for an investor?
Yeah, I mean, fund managers investors would definitely have to put some money in fixed income. But I mean, my own outlook would be that as rates continue to trend lower, you start to see that investors will also want to start to take on a bit more risk. So move away from the risk-free assets, not totally away, but start to go into the alternative space as well and start to look for try to maximize their yield as well. So definitely, I think we're still going to see some interest in the fixed income space, but you will start to see some of that interest go into the alternative space and real estate, and where you can get a lot more value, the equity space as well.
Yeah. How attractive is Nigeria? Still relatively attractive compared to its neighbors? And what was the investment case for Nigeria?
Yeah, Nigeria is very attractive. I mean, if you look at where we've been coming from and where we are now, I think if you look at all the analysts, foreign investors, everybody, what they're saying about Nigeria is all positive, right? And based on the body language of the CBN, we've seen that he has been very on point and has done quite a good job trying to bring Nigeria from where we were and where we are now. So I think the story about Nigeria is definitely positive. I mean, barring any global shocks or those things. So, but yes, for now, I think the trajectory is positive.
Great stuff. Taiwo, we're going to have you back. There's a whole lot. I would love the fact that you look at all the rest of Africa as well. So thank you so much for your time.
Thank you very much.
Taiwo Adams, co-managing partner at Aztran Global Investments. Appreciate you joining us.